Hi everyone, today let's talk about FedPal comments, as well as Disney earnings, then we'll hit the data, the charts, then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So yields pulled back a little bit after Jerome Powell's comments, and he indicated that there is still an option to raise rates at least one more time at some point, and that cuts have not been discussed yet by the central bank. So basically the same as everything he said last week. In terms of Disney, their cost-cutting plan seems to be going well. They plan to cut by $2 billion, and they posted a better than expected earnings, and the stock is benefiting from that at least a little bit in the short term. They said they plan to aggressively manage its cost basis, which puts their cutting target up to $7.5 billion. So the company really trying to cut back on expenses. This has been the biggest concern here for Disney Plus. They do have lots of subscribers, but it continues to be negative in terms of earnings. And the question is, when can that business become positive? And with these potential cuts, it could turn into a more positive business for them. Earnings per share still positive, 82 cents versus 70. Revenue missed by just a little bit. Subscribers beat, which is what you want to see. But the question is, again, are those subscribers turning into profits for the company? And that's just not true yet. They are seeing weakness on the ad side, which is not great for the company either. But where they are starting to see some benefits is revenue here in the experience division, which is their parks, which jumped 13%. And this is really the backbone of the company, in my opinion. They need these parks to be doing well. It's a large cost to the company if they are not doing well. And then hopefully once they get Disney Plus back on the bullish side, all of these pieces will come together for a positive effect on the stock price. Moving over to the economic calendar, not much for today, but the 10-year note came in just above 4.5%, which is absolutely what you would want to see from the bullish side for equities. Looking at tomorrow, really nothing here. Fed balance sheet, fairly interesting. Jobless claims has been flat pretty much for the last couple months. It fluctuates slightly, but not very much. Look at earnings for just a moment. You can see Disney, we talked about it. Warner Brothers missed on both, not great there. MGM beat on both, good for them. For tomorrow, AstraZeneca, fairly interesting. Trade Desk, also interesting. Wynn Resorts, kind of fun to watch on that Vegas strip. And then for next week, we do have Home Depot and Cisco. Those are pretty much the biggest companies left. Tyson Foods can be interesting sometimes. And then Target here on Wednesday next week. Moving over to Max Pain for the Friday session. This has shifted a lot here. So Max Pain now at 432. Total options up around 1 million, not quite there. Stock price just above that, 436.50. Put wall now at 430. Interesting. Top of the put still sitting in that 440 area. Did shift up just a little bit. And that 440 area is what we have been targeting on the SPY before we get a major reversal. The question is, were we going to wick it now? Or we're going to pull back and then push through it? The 440 area is definitely critical, and options are now supporting a move into that area. Moving over to the charts, another basically sideways day, 0.1%. You can see we are clearly at resistance. Momentum didn't step down yet, but the step up was very small in comparison to what we had been seeing. Volume not doing much yet. RSI not showing us much yet either on the daily chart. But you can see this here on the hourly. The EMAs and VWAP are consolidating. We have not really been able to make new highs. And once this structure breaks here, I would expect this to move lower fairly quickly. The question is when, and are we going to see that 440 level hit before we get the breakdown? I would suspect that we would see that break first. See a wick through that level, super critical. We've seen it the last 2 times here. Going back to September, stalled in this area, wicked the high, sold off. Same thing here, stalled in this area and then sold off once again. And here we are now testing that same zone. I would expect it to touch and then get a bigger breakdown from that zone. And really my thesis hasn't changed from yesterday. Moving over to the NASDAQ, very similar thesis, but it is a little bit different in that we have broken above this downtrend line. We are still stalling at a level. I'm watching this 372.85 level. Tested it multiple times over the last 2 days. We technically closed above it and then sold off after hours. We are below it once again. We still need a little bit more time for these EMAs to consolidate on the NASDAQ. But zooming out here on the daily chart, you can see we are definitely fading. This is certainly an interesting area. We're testing the highs here here from 12 October. We just can't seem to get above it and push into this next zone of resistance up around 378.77. Momentum starting to fade, RSI starting to fade, and I would expect RSI to pull back to that SMA, which is sitting at 46.53. Moving over to the Russell and the Dow, the Russell continues to sell off. Broke my 170.35 level, probably should have closed that position on the break, but I ended up holding it because we basically went flat after the break. Realistically, 176.47 and the 55 EMA sitting down there are going to be support on the 4 hour. 55 sitting at 167.17, critical zone right here. I still expect this to be bought up if it pulls back to this zone. I do think we had a break, pull back, higher low setup, and then rally setting up. Of course, all of that remains to be seen, but that is what I am expecting at this point. Dow looks very similar. The SPY and the NASDAQ consolidating here, can't get above 434.23, but we're not really breaking down quite yet. Still need these shorter term EMAs to consolidate. And once they have, you can start to see that bigger breakdown coming. Moving over to Apple and Tesla. Apple did break above my level. It's at 182.61. My level is 182.73 at this previous high here from 12 October. We are just barely above that level, and you can trade that level up to 186.81. Certainly possible. But again, momentum fading, RSI still fading. Doesn't mean that it can't push up here. And we technically broke out, like I said, which is bullish, but you have to look at where you're at in time and space, and it does seem extended still in my opinion. Tesla not doing much of anything. EMA's consolidating on price, meaning that this is a consolidation at this point. We're still not making new highs, which typically means that we're going to see at least somewhat of a pullback since we rallied into this zone. Moving over to Disney here for a moment, you can see this stock has been beaten up really dramatically. The highs here were March of 21, up around $200 per share. And then we broke all the way down to this 80 level, which was right in that same low here from the COVID low in March of 2000. So big arc, massive rally, big sell-off. Now we're back in this zone. The question is what happens from here? Let's go ahead and zoom into that 4 hour chart. You can see the big pop on earnings, got above that 85, 89 level, which was the low from this consolidation, rallied up, marked a pivot point here again in September. Next level would be 91.76. Certainly could be an area to watch. Let's go ahead and throw one more level above there. I'm going to take that all the way up to these dip lows going back to April at $96. I think that could be an interesting level also. So that gives you a little trading range, 80 to the downside. I wouldn't go much lower than that. I do have a level at 70, but that is the COVID low, and if that breaks, it could cut through there pretty quickly. But it does seem like we have a base. We touched this level 3 times, kind of held it, breaking out now, potentially looking to $96. Does look like a decent trade on Disney, especially with the catalyst of earnings. Moving over to Microsoft and NVIDIA. We talked about these yesterday, but they seem to be pretty active in driving markets right now. So NVIDIA making another new high here today relative to yesterday. We're holding above that 461.76 area. We were watching that level here from that previous kind of neckline. I'm going to go ahead and add a level at these most recent wick highs at 475.33. So we're in this zone now, trading off of 461 up to 475, certainly possible. Momentum fading, RSI looks weak and very overextended. Again, doesn't mean that it can't go higher, but it is a little bit of a warning sign in my opinion. Microsoft definitely extended, momentum still very bullish, and this is an absolute colossal run at this point, looking to make new all-time highs in my opinion, coming off of very strong earnings, and it still looks very good in my opinion. Moving over to transports and oil and gas. Transports have been rallying, but you can see kind of a wick rejection from these previous lows. Didn't really get into a zone that I was watching. I was really looking for a move up to 232, maybe 233.96. Certainly possible right at that 55 EMA and the 200 SMA on the daily chart. That's kind of what I was looking for, but it does seem like we're stalling here at these previous consolidation lows. Momentum starting to stall out as well. RSI is above the 50 line, but just barely. Oil and gas has had a massive breakdown over the last 3 days. I really haven't been covering this, but I should have been. You can see this has been a bit of a consolidation. So we rallied up, made a slightly higher high, lower high, then we got a double top from this previous level. Really tough trading in here, definitely a consolidation. And now we've broken below this level right around that 142.72 level. I wasn't really watching that, but you can see why that level would be important. Marks a low here in August, again in September, again in October, and then here now in November. We've gapped into this zone just above 135. Last time we were here, we did end up bouncing, but we have strong volume, big legs down, and I would expect this to continue lower in my opinion. Moving over to breadth. We did get a step down on momentum on breadth for the first time here. So still green momentum, but it is weaker now than yesterday. 50-day was actually slightly positive, but really was just a doji. So not really giving us clear direction. 200-day average continues to pull back. Again, I still think we're going to get down into the 9 EMA and 21 EMA sitting around 35. That would also be trend support. If this momentum does roll over, it could be a bigger drop off potentially. Then we could be looking for a much deeper cut for that higher low or even a double bottom, similar to what we saw here where we rallied up, kind of started to see this roll over, and we ended up almost forming a double bottom, but it ended up being a slightly higher low before the rally. And if we did see that here, a pullback down to that 25-ish range would give you a good case for some lower lows to come before we eventually see a bullish trend. Moving over to bonds, 2-year still doing nothing, 10-year finally doing what we wanted. It did close below that 55 EMA, big bearish volume, big bearish RSI. Everything continues to look weak here. Closed below this previous low here from 11 October as well. That looks good. Now I'm kind of watching this 4.35 area. In fact, I'm going to go ahead and add a level there right at these previous highs. I do think that is relevant. Add one here at this low, and let's go one more right at these tops around that 5 range. Should give us some interesting levels to bounce off of. So 435 does seem like the next level for some potential support, but even if we sold into that area, should be nice little bullish push for equities. Moving over to the dollar, another wick. Very close to that 9 EMA, really hasn't done much. Still staying below that 55 EMA on the daily chart. Did respect that 144 EMA on the hourly as well. This breaks down one more time and holds below 105 and all the EMAs and SMAs on the hourly chart. That should be a nice indicator for bearishness on the dollar, which again typically leads to bullishness on equities. I don't know if that's going to happen here with equities looking like they're going to move lower, but right now that does look like what the dollar is going to do in my opinion. Moving over to TLT, big push up 1.7%, makes sense with the 10-year selling off pretty dramatically. We closed above the 55 EMA. That is a big change here. The last time we did that is all the way back in July, touched those levels and then sold off pretty dramatically. Again, I don't think this is going to shoot up through here super quickly. So at some point, we're going to see a slightly higher low setup, rally through, and then we should see bonds kind of stabilize from there, in my opinion. In terms of an investment level, I think TLT makes sense. But again, that is the longer term perspective, not necessarily the short term. J&K not doing much of anything. It's consolidated for about 3 days in a row here. Still below 91, so not showing much. If it gets above it, that could be interesting, but you still have the 200 acting as resistance at 91.08. Moving over to volatility, move index selling off with bonds going higher. Makes sense. Let's go ahead and zoom in on the VIX though. We don't really have a clear level to work off of right now. We did close below 1490 yesterday, sold off a little bit more. Now we're kind of into this consolidation range. But you did see momentum step towards bullish for the first time in a couple of days. That is interesting. Could start to see this momentum fade out. Doesn't mean that we can't go a little bit lower in the short term, but that typically means eventually we will start to see this reverse. And I would expect a lower high setup. And then we could see this continuation back to these previous lows around 13 or even down to 1177. That could be interesting. But right now, this momentum, definitely interesting. And I would expect this to follow through to the upside. But you do have to be patient. This is the first step. And it was not a very big step at that. Moving over to my accounts, I really did not do anything today. Still holding those same positions, 170. My break even on this position is 169.40. You can see that 61 cents credit there. We're basically there after hours. I might try to roll this out. We'll see. I do think the IWM is going to find some support in that 167 area like we talked about. Qs, I think we're going to see a pullback at some point. I still have calls at 367 for $8.30 credit, which puts my break even down around that 359 area, which gives me lots of protection to the downside, over $10 over the next week. So I'm not really worried about that right now. And if this starts to fall below my call strike, I'll probably roll these in and down to protect myself a little bit more, but we'll see how that plays out. Right now, everything is still consolidating at the highs. Let me know down in the comments section what you think of Disney. That stock has been beat up pretty dramatically. Can it revisit its all-time highs, or is it going to continue to sell off indefinitely? Obviously, I don't think Disney is going to go bankrupt anytime soon. They're still profitable, but will they be a good investment again? Who knows? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.